Let's chat about one company that you will have a chance to trade at least very soon, because DoorDash officially filed its S1 here as the company, the delivery company, prepares to go public. And it revealed quite a few things here. Their revenue numbers are astonishing when you look at that. Through September this year, the company registered $1.9 billion. That was up more than 220% year over year. When you look at 2018 to 2019, that revenue rate was more than 204%. And AIkiko, I mean, when we look at it, you put it into context with some of these other 10 companies we've seen recently file their S1s to go public, it's destroying everything else we've seen.
Yeah, that growth rate, certainly a very significant one. Interesting to note, though, when you look at how Uber and Grubhub are trading today, no real significant move on the back of this, largely because it was expected. Grubhub is, in fact, up about 2.5%. Some more clarity about the scale of DoorDash, though, because this is going to be an interesting one in a space that is so competitive. We're talking about 49% market share compared to Uber's 22% and Grubhub's 20%. 1 million delivery workers, dashers, as DoorDash calls them, and then more than 18 million customers. I wonder if we can use this chart here that does a breakdown of individual cities, because to me, this is what's really significant about this delivery market. It really depends on city to city. And DoorDash has a significant footprint in some cities like Houston, while here in New York City, Grubhub has a dominant market share, about 52%. And as always, Zach, whenever we look at these tech companies, we look to the risk factors, and DoorDash making it very clear that that revenue growth rate you just referred to will continue to fluctuate over the short term, decline in the long term. Increasing competition certainly going to be a key concern. Also, the lack of loyalty, because this is not one where you have to sort of cancel and resubscribe. It's a pretty easy transition between the platforms. So that's what DoorDash is going to have to contend with. But to your point, they certainly have very strong numbers going into the IPO.
No, it's a pretty good point, because you can use Grubhub, you can use Uber Eats for lunch, and then you can switch over to DoorDash for dinner. Pretty seamless there. Yeah, you split it up for the family, same meal. But also on the front, I mean, when we think about profitability, that was one key thing that stood out to me, because you think about the sheer size. Obviously, Uber and Lyft, when they came out, were not profitable companies. And DoorDash isn't either by traditional metrics. But when you look at adjusted EBITDA, they posted $95 million, positive $95 million through September 30th. Keep in mind, Lyft's goal for that same metric, adjusted EBITDA profits, they're hoping to reach that by Q4 of 2021. So if you're a DoorDash, you're growing that quickly, you're coming out here as a public company, and you can point to numbers like that. I mean, profitability does not seem like a far cry there, especially if you're looking at that metric, which Lyft uses. I mean, that's got to be key, because Zoom, look at the way that stock traded when it came out. That was a profitable unicorn. It exploded, AIkiko.
And, you could argue that they are coming to market at sort of the perfect time, at least for the company. I mean, market conditions aside, these delivery companies have had huge growth during this pandemic. And I think it's interesting how DoorDash frames their business model, where they talk about how we are more about helping small businesses, not necessarily about the delivery. Of course, it's a little of both. But no question, a lot of small businesses have relied on these delivery companies to be able to get their business out at a time where they haven't been able to get the foot traffic into their brick and mortar stores.
Yeah, and that's one key thing that was not lost on me in terms of where DoorDash was putting the emphasis on this S1. We've seen that before. Uber saying it's not just rides, Lyft's not just rides, it's about empowering communities. DoorDash going with a very similar message in their S1 as well. As they look to, as your point, it's well taken, where else the growth opportunities are there as they move beyond just food. I think that's important to keep in mind, especially as they're proving they can become a profitable company just focusing in on food. So we'll see what happens there. But DoorDash filing, well, we're still waiting on Airbnb's filing as well, but clearly a lot more action to come in the IPO market.